Everyone, hopefully having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me, it's at Finding Your Score Finance. And if you want to join our community, finding-value.com, I dive deeper into all these investment opportunities, share them with everyone in the community. I do technical analysis to time my purchases. Then I hold on and ride it for the bull market. If that seems like a similar strategy to you, definitely sign up, use special as a coupon code, get 50% off the first month on a monthly membership and a $100 discount on the yearly membership. And you can always switch from a monthly to a yearly if you're an existing member for that savings. All right, finding compounders. We're going to start with Peter Lynch on investing, and you're going to hear a lot of similar things and traits that you might hear on a weekend call during a Q&A session. So here's Peter Lynch on investing. I'm going to read the darkened ones. So the rule of 72 is useful in determining how fast money will grow. Take the annual return from any investment expressed as a percentage and divide it into 72. The result is the number of years it will take to double your money. The real key to making money in stocks is to not get scared out of them. A lot of people get scared out of their stocks, and I have a feeling that a lot of it deals with not knowing what they own. Either they just bought it because someone said, "Oh, this is good." They don't know anything about it, and then they get scared out of it very, very quickly because they don't know anything about it. The list of qualities an investor should have, I'm going to go over this one here, include patience, self-reliance, common sense, a tolerance for pain, open-mindedness, detachment, persistence, humility, flexibility, a willingness to do independent research, an equal willingness to admit mistakes, and the ability to ignore general panic. Here's another one that's bolded towards the middle bottom here. A price drop in a good stock is only a tragedy if you sell it at that price and never buy more. To me, a price drop is an opportunity to load up on bargains from among your worst performers and your laggards that show promise. If you can't convince yourself, when I'm down 25%, I'm a buyer and banish forever the fatal thought, when I'm down 25%, I'm a seller, then you'll never make a decent profit in stocks. And I just want to make a comment there. It is very, very difficult to time the exact bottom. So you could easily be down 25% in a stock or more, and it would still present an incredibly good buying opportunity. That's the conviction that an investor needs in order to be successful. You need to get in there and say, okay, I love this company. And if the company's trading, let's just say it's undervalued, price to book of 0.5, it doesn't mean that it can't go lower. What if the price to book goes to 0.35? Well, that's perfect. You just got a better deal. But what a lot of people do is they get scared out of it because it went down. Guys, like the whole root of this, the whole like core of everything that I talk about is basically just doing everything different than everyone else because everyone else doesn't make money. So you're going to have to take a different strategy or a different approach and get in there and do opposite of everyone else. Everyone is loaded with these preset values that make them absolutely horrible investors. They chase price, they sell when things go down, they get scared, they don't know what they own. Just do the opposite. Know what you own, don't get scared, double down when people are fearful. Here's another one. You should not buy a stock because it's cheap, but because you know a lot about it. Well, I think you should buy both. Hopefully you know a lot about it. Hopefully it's a good company and a business backing it, and it's cheap, and it has a good stock pattern, and the sector's cheap on a ratio perspective. You only need a few good stocks in your lifetime. I mean, how many times do you need a stock to go up tenfold to make a lot of money? It's not a lot. I um I was fortunate enough to have a really good 2020, 2021, and 2022 time frame where I really my portfolio did incredibly well. And you don't need a lot of those in your life to do that. I would consider that to be a life-changing move myself. Was from 2020 to 2022. And I'm still holding a lot of those stocks, and I never sold uh, at least the majority of them. I didn't sell the majority of those stocks. So I'm still riding it and holding it through this bull market because I still think that they are cheap. I still think they're great opportunities, and I still think the sector that they are in is cheap in relationship to other asset classes. So if I were to sell it, I don't know what else I'd go into. There's nothing else I'd want. I want the stuff that I'm in. Literally, nobody is talking about this. This is the 4-week average US exports of propane. So, propane is getting exported in thousands of barrels per day there, a pretty good amount there. And I mean, that is a bull market. Look at that thing go up. We've got Mike Zaccardi, and I've seen this chart all over the internet now. It says the risks are rising that we could see another inflation mountain emerge over the coming months. Torsten at Apollo. And what they're doing is they're comparing the fractal of 2014 to 1966 and how this is moving. And then they overlay it on top of each other and they say, oh, we've got one more um, wave higher of inflation potentially. Uh, when you go back and you look at these waves, they were caused by the real estate market. The real estate market went up, came back, went up, came back, and went up. And it was monetary inflation driven by the real estate market. Each one of those waves was a was an impulse wave of real estate buying. We overproduced in each of those cases, and then we had a recession or pullback in every single instance here in each of these. I don't I don't know if this is going to be a one-to-one like that. The real estate market to me looks pretty solid. I've listened to some earnings calls of the home builders. Um, I'm definitely not a doom and gloomer. And even if we do get a slowdown, let's say rates are too high, I think they're just going to lower rates and home buying is going to come right back. How long will that last? I don't know. That's what we'll have to see. Will that be the last impulse move? I'm not so sure. The reason I'm not so sure is because we've got fiscal spending and our interest expense is very high. So if that continues, I don't know what will stop the train. They have to print their money, print their way out of this. So we're comparing a monetary bank lending regime to a more fiscal spending regime. So I don't. We'll see. We'll see how that all lines up. We'll see if we get this last surge. I think we're going to continue to go up even after this 29, 30. I think they're going to have to print our way out of it for a long time. It may be 20 or 30 years. And that's how long the last cycle lasted, bottomed in the 1940s and went all the way up to 1980. It was dang near 40 years. And our 40-year decline in interest rates on the 10-year has broken to the upside. So I'm not so sure that this is going to be this is an end of trend move that we're comparing, and we're at the beginning of a trend of the 10-year breaking out of its 40-year decline. So I tend to think that things are going to be a little bit different, but they could be very similar in the way that they move. QE Infinity says, yep, basically, the Fed is in the worst possible position, analysts say. And I think that deals with a slowing economy and inflation simultaneously happening. That's stagflation. And again, people are looking at the yield curve and saying, oh, it's uninverting. But it's like, hey, how is it uninverting? We have the long end of the curve remaining resilient, potentially going higher. Across the world, not just the United States. Go look at other people's currencies. Japan, France, the gilts, all of them. Go look. Go look at the 10 years. See, tell me if they're going to go down or up. In my best estimation, they're going to go up by looking at the charts. And then the short end, who knows what the short end's going to do? They're going to try to pull that down, right? So the yield curve would uninvert, but it's doing it not by yields falling, where people are scared. They're scared of inflation. And that's why the 30 year is going up, not down. But again, we'll continue to monitor that and see what it looks like. Here's the great Martine, Microsoft. What do you notice? Now, he's trying to create, potentially produce the same fractal, which is a pattern that repeats over time. What I'm more interested in, and what I think is probably right, he might be right, and I don't know if he is, but he might be, is that this is a little bit of an overshoot. There's the overshoot there in 2000. And then look at after what Microsoft did. It did nothing from 2000 all the way out until it started bottoming and turning in the early 2010s. This is what I think will come in a lot of different technology stocks out in the future at some point. At some point. I think we're gonna grind sideways, where earnings are going to catch up to their valuations. And commodities are going to get their time in the sun. Why do I think that? Because everything's in alignment to do that. Commodity stocks are putting in bottoming patterns. We've got a cheap commodity to stock ratio. We're in an expansion phase of real estate. We could see the dollar weaken, the DXY. All of those are key alignments for a commodity bull market. And we'll see if this rolls over. I'm not stating that it will, but I'm curious if it will. And Bitcoin isn't following here. That's concerning if you're long Bitcoin. Why? Why is it not following? I'm not exactly sure, but usually Bitcoin follows the global M2 money supply with some sort of lag. And we can see a little disconnect going on here. I don't know if that means anything. I don't know if it's going to catch back up. Difficult to say. We'll continue to watch it. Here's Oren. He says, it's crazy. Every time I want to use this chart of the inflation-adjusted price of silver, I have to update it because inflation keeps marching along and the present value of the prior highs keeps rising. Right now, the 1980 high is $198 an ounce, and the 2011 high is $71 an ounce. So there is the inflation-adjusted price. We're at 40, and then adjusted upward is 70 and 198. You can even draw a trend line through here that's broken on this inflation-adjusted price there for silver. JC Parrott says, apparently Europe is a disaster. Meanwhile, European stocks are busy setting records every month. Who should we believe, angry people or price? Well, it's not price. What moves these are currency exchange rates. The dollar, I think, is about to fall, so people are front-running and changing money flows in the system and moving it to different currencies. So the stock market of different currencies are doing well, including emerging markets. So I think it deals more with a weakening dollar, money moving out of dollar-denominated assets and moving towards other non-dollar denominated assets. That's my guess. We've got Great Marti here. And again, I'm not a huge doomer. I don't prescribe to these the doomer mentality. But he's got gold, $50,000. Gold is heading to 50 grand, sparking the greatest bull market ever, dwarfing past ones. This will start after the equities crash and last for years. Few understand this. Now, that is a possibility. Not stating that it will 100% occur, and I know the time frame of it. But if bonds and stocks do not work simultaneously, and their stretched valuations that they got at both of these peaks for equities and bonds, there's a lot of money over there. I mean a lot. And gold and a lot of these other commodity areas are very small in relationship in a market cap perspective. So if some money comes flowing over, it's going to blow these things out of the water because there's so much money in the system. What he did is he took the trend line, the upper trend line from 2000 onward, and just drew a trend line straight out. And if this goes all the way to the upper end of the trend line, you're looking at $40,000 or $50,000 gold. Now, is that possible? It's possible for sure. Is it likely? I don't know. I really don't know. I look at this stuff and I get ridiculous numbers sometimes in gold and silver. And I'm like, is this really true? Is it possible? Is it plausible? What kind of outcome could we get? And I don't want to dwell on the numbers per se. I just know that it's going to be a very big number. So I want to be exposed to that big number, whatever it is. I think platinum could do crazy things. I mean, crazy things, guys. When you look at the ratios historically, we go back to the 1800s to find the same ratio that we're at today of platinum to gold. So is it possible that we go to some ridiculous level again in a hyperinflation or a very high inflation environment, like the 1920s, where platinum outperformed gold at a 5-to-1 ratio? In fact, it was 5.5 is where it peaked. 5.5 in the 1920s. And that's when hyperinflation occurred in Germany. And we also had a big boom in the 1920s as well. Could that occur again? Yeah, it could. Do I bet on it like that? No, I don't. I just think that everything's going to go up in commodities, and gold's our leader. And if gold goes to some ridiculous amount, that means commodities will. Now, what evidence do we have that gold could go up there? Well, we've got a 45-year cup and handle pattern that's about to break on silver. That's evidence that we could see a gigantic move in silver. And if that is evidence, and the big trend line break in platinum, we have a what is that, 2008 till today trend line break to the upside. So yeah, I could easily be convinced that we would see a gigantic move in all of these metals for probably a decade plus. Silver, $300 minimum. Another one from the Great Marti. A break above the ceiling in coming years will drive prices far beyond $300. And what he's doing is he's just taken this upper trend line, contacting the 2 points, which isn't a strong upper trend line. We've got the cup and handle here. There's the cup and handle, and that's going to break up and potentially go to the upper end of this trend line. That trend line is around $300 an ounce. So could this work that way? It could. It very well could. We have another cup and handle. If you draw a line across this way, going across, you have a cup and a handle that formed here and broke out and ran to the upper. I think we could do a similar breakout and come up and touch that again. But when we broke that, that was from 1970, basically early 70s to early 1980. So it was a 10-year move, and this could happen in a 10-year move. See the alignment that we're seeing in a lot of these charts? Katusa says I went over this one last time. So that's where we're going to end it. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Special is the coupon code. And that's all I've got for today. So we'll catch you next time. See you later.